Why is gold holding near $4,700, with two geopolitical wildcards unresolved? Well, here is my answer. Gold edged 0.2% higher to $4,696.69 in Thursday trade, supported by a weaker dollar. Two wildcards are keeping investors cautious: the Trump-Xi summit in Beijing and a U.S.-Nari stalemate with the Strait of Hormuz still closed. Both sides have rejected each other's peace proposals. Tehran called Washington's offer one-sided. Trump labeled Nari's counterproposal garbage. The fire cease is on massive life support. At the Beijing summit, Xi led with Taiwan, warning that mishandling the issue could push both countries toward clashes and even conflicts. Trade talks were secondary. Markets have almost entirely priced out a rate cut this year. According to the CME FedWatch tool, traders now see a 36% chance of a hike by December 2026. Near $4,700, gold isn't stalling, it's consolidating on a floor built from unresolved risk. In other news, what does Kevin Warsh as Fed chair mean for gold? Kevin Warsh was confirmed Wednesday as Federal Reserve Chair in a 54-45 Senate vote, the closest in the modern era. He inherits a central bank under political pressure and an inflation problem with no clean solution. Trump wanted his chair to do what he tells them to do. Trump probably won't get his rate cuts this year, 2026. According to the Bureau of Labor Statistics, U.S. CPI rose 3.8% year-on-year through April, the biggest annual increase since May 2023. PPI surged 1.4% for the month, the largest monthly rise since March 2022. Warsh has called for regime change at the Federal Reserve. Did you know it is not federal and there are no reserves at the Fed? It's a privately owned bank. He wants a smaller balance sheet. But markets are now pricing a hike as more likely than a cut. A new chair, political pressure, and inflation above 3.5%. That combination is exactly why gold's independence from the dollar system matters right now. Moving on. Oh, what's this, Sarah? Okay, let's get on with the news. Why did the Nari push mortgage rates to a 6-month high? The 30-year fixed mortgage rate hit 6.57% on Wednesday, according to Mortgage News Daily. That's 15 basis points higher than last Friday, the highest since March, when the Nari debacle began. The cause is a chain reaction worth understanding. The Strait of Hormuz closure pushed oil higher. Oil pushed inflation higher. Inflation forced the Federal Reserve to hold rates. Held rates pushed mortgage costs up. The debacle in the Middle East ends on a for-sale sign in Ohio. Housing inventory is still 11 to 12% below pre-pandemic norms, according to Andy Walden, head of mortgage and housing market research at ICE Baby. Buying power is down roughly 4% since February. 2 consecutive hotter-than-expected inflation prints made it worse. This is what energy-driven inflation looks like when it moves through the whole economy. Next up. Hi Laura, your hair looks lovely today. Look, there's Prime Minister Modi. What does India's gold import duty hike tell us about physical demand? India raised import duties on gold and silver to 15%, from 6% on May 13, 2026. The rupee was sliding to record lows. Conflict-driven energy costs had widened the trade deficit and drained foreign exchange reserves. The physical market's reaction was immediate and extreme. Let me repeat that. The physical market's reaction was immediate and extreme. Gold discounts in India widened from $17 per ounce on Tuesday to a record $207 on Wednesday. Local prices surged. Investors sold at steep losses just to exit. According to Reuters, dealers warned that gray market smuggling margins could hit 18%, up from 9%. That's the market telling you something. The demand didn't disappear. It went underground. Governments under currency stress always restrict access to gold before fixing the underlying problem. This is what that looks like in practice, and it's worth knowing before it happens in a market closer to home. Moving on. Oh, thanks Laura, that coffee looks delicious. What is the World Bank forecasting for gold and silver in 2026? According to the World Bank's April 2026 Commodity Markets Outlook, precious metals are projected to surge 42% in 2026, the top-performing commodity category, ahead of energy and base metals. The Strait of Hormuz disruption debacle triggered the largest oil supply shock on record, an initial reduction of around 10 million barrels per day. That pushed overall commodity prices 16% above the World Bank's January 2026 projections. Silver is the highest performing individual metal in the forecast. Gold's elevated base limits its percentage gain, but the forecast calls for continued new highs. This is not a fringe prediction from a gold advocate. It is the institution built to stabilize global finance, saying the structural forces behind precious metals are real, durable, and not, I repeat, not going away. What are the 5 crises really telling you, do you know? 5 stories, 5 corners of the world, 1 big picture. Okay, it's screaming, get as many assets as possible. The inflation wave is coming, and it's not going to stop. The systems underpinning modern finance, central bank credibility, currency stability, sovereign solvency, housing affordability, energy supply, are being stress-tested by the same source, simultaneously. The current debacle that won't end. An inflation that won't cool. Institutions with less room to maneuver than at any point in 2 decades.